Hello, Warriors. Let's have a great week. It's Jack Schwager Day. How you doing, Dan, Kevin, Ron, Patrick, FX Glenn? Everyone doing okay? Looking forward to a great week of interviews, great week of trading. I want to start off here in case you're not aware of our YouTube page. I think this is required listening and viewing. People ask me, how do I prepare for a week? Of course, I go over my charts. I look at patterns, look at my work, my RSI. But I also always include next week's preview by Pipsar. Okay, so it's on our YouTube channel. I'm not the only one. Usually gets about between 700, 600 views. So subscribers are looking at it. I think it's a great way to prepare. In fact, Jack Schwager is going to talk about planning time. It's in his new book, and I would include this in your planning time. Okay? Do many of you do this? Watch Blake's preview. It gives me biases, certain levels to pay attention to. The pairs that he's focused on that are on his radar screen. Okay. So let's get to the markets now, and really the one trade that I recommended after the NFP is working out. Okay, it was right off this major trend line in Aussie Kiwi, high zig, and this really does prove my theory that almost anything you do on Friday, you're going to have an opportunity to do the next day on Monday. So even if you didn't get long into this candle, you had another opportunity here. People that have been with me in chat rooms, trading rooms, know my style. And if you're up, no, it'll start at the top of the hour, 1 hour from now, or 10, top of the hour. That you take partial profits when you're up 50 pips or better. You trail your stop to BE now. You know, you're wrong under these lows. I don't think you want to sit with it under these lows. And perhaps you get another pullback to 440. So we take it one day at a time. We've come off support. It doesn't guarantee that support is going to hold forever, but it was at least an area where we got a decent bounce from, so it was respected. And that's my look at Aussie Kiwi. Hope that call on Friday helps some in the room here. Also, EG, you know, we had that initial pullback and then new highs. To me, it's starting to look a little tired. We made another new high, but really didn't confirm. To me, it looks like EG could be under some pressure. We'll see. And we are favoring, and on Blake's preview is favoring some shorts here in USD CAD. This could be a good level. Of course, we talked about 5.5 last week with Steve Volge and Grega and Nick. So, you know, you could probably risk the 5.5 here. Maybe you get a pop to 5 or so, but I think we're going to at least challenge this 34.20 area. Possibly take out the 33.80 area. So we have a big week. Jack Schwager, everyone looking forward to hearing Jack, who's read Jack's book, Market Wizards. So he wrote a book. The title is A Complete Guide to the Futures Market. It's very comprehensive. I think anyone who wants to have a license and wants to represent the public with a Series 3, okay, good, LaShawn. With a Series 3 license or be a CTA, I'm going to tell Jack I think it should be required reading. And I'm wondering who's here on my team. Who's here with the team today? Also, stick around for Jack's interview because he has a company called Fund Seeder. It's
Dale,
this. Yeah, hi, Steve. How are you?
Here, I see Blake is here as well. We're looking forward, as you understand, to Jack's interview. And the question about Market Wizards is who hasn't read it?
Yeah, that's true, Steve.
Because if they haven't, it should have been a mandatory thing to do when you want to get into the field, like starting from reading market wizards.
Right. So here I'm showing his fund seeder page, and I'm going to be asking him about it, how it differs from a lot of prop trading firms, because a lot of prop trading firms are pretty slanted to the prop trader company. So I'm going to ask Jack about it. He finds funding for emerging talent worldwide. So I know from having run rooms, chat rooms, there are guys, at least 30 I know over the last several years, that trading is not a hobby. It's how they support themselves and their family, keep a roof over their head, food on the table, and live a nice lifestyle. So there are many in this community that may be interested in connecting up with Jack through Fund Seeder and expanding the capital that they're trading. So we're going to get into this as well. So Steve, why don't you take it away, or Jake or Blake, and show me what you guys are seeing this Monday. We got a lower opening in Euro, and Euro's weaker than the pound. I think that's a little bit of a surprise, but I'm going to pass you the ball.
Absolutely. Blake, if you're listening.
Here too. I'm just going to go grab some coffee really quick, so just give me a second.
Okay.
Okay.
You want to start? Okay, great.
No, I want to go grab some coffee. I'll be right back. Yeah.
Okay, so you want me to start until you're back?
Go ahead.
Yes,
okay.
Yes, I'll be back in a few minutes.
Okay.
Yeah,
sure.
Go ahead, Steve. So, Steph Volge, you had a great game last night. I don't know what you guys thought, but I put out a tweet yesterday and I said, imagine that the Cavs and the Warriors were one team, okay? And I said, in FX, it's already happening, all right? We have LeBron, Morrow, and we have Stephen Volge.
They're all amazing, but
all-stars. So
if you ask me, and it's not because I'm backwards looking, nobody can compete with MJ.
Yeah, I grew up with the guy.
LeBron is an amazing player. There is no question about it. But MJ was something different.
Well, I look at Blake. He's like the power trader, and you're like Steph Curry. You're more of the finesse trader. So that's how I came up with that.
Thank you for your kind words.
What are you seeing, buddy?
Okay, let's begin with Aussie Kiwi, because we talked a lot about it on Friday, and I know we've seen a lot of our friends here ask questions over it again. You remember that Nick had, because she's working, a lot more with Fibonacci due to
she had confluence.
She had a perfect confluence here, and I drew actually live when she said it, which was the 88.6 of this move higher.
Yeah.
And actually, let me draw. Okay, it was the 88.6 of this move higher, and it was also the 78.6 of this move higher, and we had a perfect confluence at this level. We also had this potential trend line, the blue one here, that comes across those two, and as it seems, we're getting something worth looking at now. Because we have today a bullish engulfing so far, which is a very strong reversal signal, a very strong reversal candlestick. Of course, it's early in the day, but I'm saying in advance, everything we're talking about when we talk about daily candlesticks, of course, we need to wait for the daily candle to close. But from what it seems right now, we finally get, a worth mentioning reversal signal at an area that produces, a lot of confluence. So this looks very likely that it can turn out to something bigger. Now, where would somebody expect resistance? Initial points of resistance are in this zone, which is around 1055. And if you remember, Nick was monitoring a level somewhere at 1054. I mean, very close by. For a first resistance as well. She remains bearish as long as she said she believed in a bounce, but she would be more constructive if we broke above it. So First area of resistance is 105.55. If we go above there, then it's 1062 because we had, previous lows and highs there. So those are the, the targets for somebody to watch. Now, another pair that you mentioned, and I'm not doing it often, but I'm going to move down to a 4-hour scale. It's the Euro Pound. Today, so far, we have a dark cloud cover in the daily candle as it seems, but what troubles me more, it's not the candle, let me bring here another browser, is this. This is a 4-hour chart of the same Euro Pound. So it's this actually.
It's a rising wedge.
Exactly, or Grega would probably tell you that it's ending diagonal. Exactly. So to be honest, I am constructive after we had that break, but any move like this or any move like this, should send you a good signal that perhaps this is the place to take profits. And then, let me go back to the daily chart.
Look at that, you're golfing on Mars. And
then perhaps have a look at what happens when we retest the 86 level, or perhaps even lower. 86 hosts the previous 61.8. It's also the breakout point. It's also the 200 DMA. You can see it clearly because it almost coincides. So it's also the 200 DMA. Or a retest of the broken trend line, which more or less coincides with the 50 DMA as well. So, this looks like a terminal formation. That doesn't mean that the pair is going to reverse and, resume its previous bear trend, because it's very likely that it has actually turned higher now. But it's definitely due for a correction. It's not by accident that we've started showing some fatigue after reaching the inverse head and shoulders target. That happens very often with successful completion of formations such as that. So, this is a fair warning for the Euro Pound, which you also mentioned. That's why I'm starting from those. Now, this is also due to cable's reaction. You remember we had said that this 128 zone is a very important zone for a possible bounce. I expected that we will perhaps penetrate and go lower, and I still expect that it's a likely possibility. I mean, we might see something like that. Perhaps a retest of this zone and perhaps a move like this. It is very likely. So having an A, B, C, something like that. But definitely today we gapped lower, and so far we have a bullish engulfing so far. But it's early in the day as well. On the other hand,
if we're going to get a pullback, maybe 86.20 or 86 in EG, the euro really becomes your preferred short. And on Blake's look a week ahead, he was showing the trend line, and that's one thing I was going to wait on. Plus, Nick had some targets up there above 113, so that's one of the trades I have on the radar screen.
Yes, let's have a look at it. Okay, I had since way earlier, since here actually, I drew, we do that in Elliott Wave sometimes. When we saw that this is probably a bottom, I drew a line from here, then I took the parallel, and as you see, we have a channel that we've respected already twice. Okay, this was a momentary, not more, but this was like a half a day overthrow, but doesn't mean it has to be completely perfect. Then we retested this zone, which was already there, and we respected it. What I'm trying to say is that the move higher in the Euro USD so far has been nice and technical. So I have no reason to disrespect what I'm seeing. What they were showing is that this here, you see this little pickup here, is the end of the week here was the election high for the Euro USD, and the market very often does show a respect for levels like that. So this is something we should take into account. We also have the 78.6 being at 113.40. We also have the resistance of the channel. So, for example, if we saw another move higher, we might have had a confluence up here. So yes.
Blake has a weekly channel, Stevie.
I know which one he says. I'm gonna.
Yeah, that one.
I'm going to tell you which one. This one. If I draw a line from here which passes there, and from here, yes. So there is also a weekly channel. So yes, there is no question about it. We have.
Where does it come in again? About 14 and a half?
Let's say about 114.
Yeah. Okay. So we have multiple levels of resistances coming within the, let's say, the next 100, 150 pips, and yes, we should see some kind of a bounce for the dollar. So there is no question about if we're going to see some kind of a correction for Euro USD. We are. The question is what happens from there and what kind of a move lower is it going to be? Is it going to be a corrective one or an impulsive one? From what I'm currently seeing, I would most likely expect a corrective move. But you know, you take it as it comes. So yes, this is not a place to be long, to establish fresh, you know, long positions in Euro USD. If you were long from the break of this triangle, perfect. You're good to go. You can just keep trailing your stop within your profit, and you can ride it because you never know. You know, very often people start looking at the reversals and they come way later than, you know, the average person expects.
Can you pull up? Can you pull up the Euro Aussie, because FACE member Armand Shine is a very good trader. And Armand, you should stick around for Jack today because maybe there's a fit for you. But he's looking for right shoulder to develop. Huh?
Look at the Euro Aussie. I haven't touched this chart for several days. Look where we currently are. And actually, there is one area missing here, which I'm going to draw right now. Look where we currently are. You see this?
Yeah. Looks heavy. Yeah.
Yes, and we are currently testing the confluence of a level that created multiple rejections up here and the ascending channel. So this is a very important level. If we break below it, we will have we will finally have a signal that can tell us, okay, this is actually finally the time that you can expect, you know, a correction to start playing out. Okay.
Armand, on what time frame are you looking for that Euro Aussie right shoulder? Because if it's off the daily, then you're looking for a pullback maybe to 45 or so. Is that correct? And daily, okay. So you think 45? Euro Aussie is on the screen. Can everyone see it? Martin can. And hello, Jennifer. Yes, this is Grandpa Dale. It's so nice to see your name. It's been a long time. Glad you found me. I'm with the best team on the net now, Jennifer. The best. Okay, so can you see the chart now, Martin? You may want to log out, come back in. And I'm asking you, Armand. Yeah, okay, so you're thinking maybe all the way back to 45 for a right shoulder. Okay, thank you. All right, go ahead, Steve, LeBron and Steph Curry.
Blake here, you want to take over?
Yeah, I can. Did you talk about us, the launch of our cryptocurrency analysis?
Not yet, but this is a good pitch in for you to come in.
Okay. All right. Well, let me go ahead and take over for a bit.
I told people, Blake, I don't know if you heard it, but, you know, part of my planning routine, and Jack talks about it in his book, about having a planning time routine, that your look at the week ahead is part of my planning time.
Oh, yeah. Well, you know, I heard you say that a little bit earlier. I hope that, you know, people take the time to watch the video. I mean, it's, you know, I put it together for a reason, you know, it's to get my head straight, but hopefully everybody else uses it as well too.
Yeah, it puts things on the radar screen I wasn't paying attention to, provides some biases should the market set up that way. I think it's great. It's not too long. You usually keep them to about 15 minutes and make a lot of major points in a short period of time. So
yeah, that's the goal of it, and hopefully, you know, it gives you guys some things to think about going into next week. You know, this week's going to be, you know, well, first and foremost, I think the thing that I can't help but stop looking at, and I'll talk about, you know, Bitcoin and Ethereum here in a second, but and I'm not as qualified to talk about it as, like, let's say Nick. Nick's really well versed in the cryptocurrencies, and I don't believe she's here today, or at least right now. The thing that I'm looking at right now is I'm looking at the dollar yen, and I'm really focused here on the dollar yen because I know we're really close to the 200-day moving average, and we're really close to this spike lows here. And so I have a dollar yen short from Friday, and I'm holding, part of that right now. But wow, the pound's really getting a lift here. Hold on one second. Pound should be right into resistance. Hold on one sec. Look at the pound's launching right into the 618 right here. Underside of this trend line, we should find some resistance right here. I think the pound's just taken out a few stops. So just watch the cable as we hit new trend highs. We should probably stop here just short of 40, I would think. Anyway, I'm kind of looking at the, obviously the dollar yen. The dollar yen's really close to support. I think if the dollar yen starts to get below the 110.20 level, that's going to be huge because that's the 200-day moving average, which is right here. Also horizontal support. And for obvious reasons, I know I talked a lot about this. I actually tweeted about it yesterday. You got to watch gold. Gold is
great call, Blake.
Well, thanks. I mean, the thing is, I'm long gold, but I haven't added just yet because I'm not sure. Like, usually when you have a move like this,
the range would expand. That's a kind of a tight range. Is that why?
No, I mean, what I want to say here about gold is usually there's a catalyst. It's a driver, especially on such a big, asset class like gold. Like, what's the driver that's going to drive gold higher right now? I mean, I don't, maybe rally in bonds, but, I don't know. I don't, like, like looking at it, the question that, you might ask me, or somebody would ask me is, well, hey, it's breaking out here. Are you going to add? And technically I should be adding here. Technically I should be looking at it going, okay, I'm going to go ahead and continue to add to my longs. But again, there's no real catalyst at the moment for me to do that. And I know we're, up, past the 786 and, on the way that people are looking at gold, we're probably breaking out. I should be adding. I just haven't yet. Okay. I mean, I know I will above 1300. There's no, like for me, there's no doubt in my mind that's a place that I'll be adding. But I want to see us continue to build this like bullish, activity here. It looks bullish. It's holding above 1280. And I know it's a major trend line. It's just, why? And
maybe
I don't
maybe you want to wait for a close or two above that trend line. I mean, how many thousands of times, my friend, have you seen markets poke their head through trend lines intraday and then not finish above?
Well, that's the point here. Is I'd like to see us by the end of the day, maybe closing above there. I know, like I said, above 1300, I'm bullish. Like I'll be adding, but do I add here? And the answer that I've come up with at this point in time is no, not yet. And I'd like to see continued dollar weakness. The dollar is, I mean, I know, and everybody else should know that the dollar index is right here, and you're still bouncing off this 161% extension of this move, but really the 618 right here is just below price. So, is this the right time to really, for gold really to press higher? I don't know. And it's not like we're seeing a breakdown in equities. Bonds look good. I mean, you look at here's the 10-year. The bond market still is, for the most part, breaking higher. Now I know we're a little lower at the moment, but it's intraday. If bonds break out, here's the 30-year. If they, this is at the 200-day moving average too. If they break out, I think we have to, continue to be bullish on gold if bonds break okay? But they're not following through yet. You know, we haven't seen the dollar yen. I think if the dollar yen broke 110, that might be a catalyst that supports a decision by me to be long gold or to add to gold. But we're not. You know, we're obviously not there at.
Blake, maybe people are positioning themselves for bombshells coming out of Comey's testimony if he testifies Thursday. And maybe because there's so much anticipation about it being a bombshell, the way Mueller has prepped him, that it won't be. It'll be more of, that's something that we already know.
Well, that's possible, and if you use ForexAnalytix, there's a link. Where'd my link go? Hold on, I had a link.
Your cuff link?
No, I had a. Why isn't? Let me see. Yeah, I have a link in here. I thought. Oh no. I don't know why my link didn't pop up. Hold on really quick. Maybe I should refresh. Let me see if that worked. Give me a second.
Look at all these pushed updates coming out.
Yeah. Actually, maybe Steve might be noticing this when I did that. I did an update, and Steve, are you around? Are you listening in?
So let me have a look at it, mate.
Yeah, take a look at the useful links in the live stream. Anyway, there's an article I published there about, I put out from the FT that says gold and yen attractive in a week of risk events. Is the name of the title of the article. But anyway, I don't know why that didn't pop up. Anyway, so regardless, I think that you're right, and that was the point that the FT, Financial Times, was trying to make, is that this week, because of the risk events, might be attracting traders.
Is your link called Gold and Yen Attractive in a week of risk events?
Yeah.
Okay. Live stream and useful links works perfectly fine for me. So you want to close this site and just restart it? Perhaps you have something with your browser.
There, yeah, I don't know.
There it is, Blake.
There it is.
Perhaps a little glitch from your browser.
Yeah, it must have been my browser at the moment. But anyway, that link right here is to the FT article I was just talking about. But it goes along the same lines what you're talking about, Dale. Wow, look at the dollar. Dollar really came under some pressure here. I mean, you got. I would be real careful with the pound right here. Currently at 129.40. This is actually probably an area that you would. Actually, I just shorted a little bit of. I just shorted a little cable, just a small position. I don't trade. I haven't been trading too aggressively the pound. I'm buying the euro pound, which I'm still long. Even though it's pulled back, I'm still long a little bit. But this should be pretty key resistance in the cable. I just shorted it at 35, so as it's reaching up here. But I don't know why the cable rallied so much. I don't think there's any.
Maybe a new poll came out because the polls were tightening. It was looking more like a tight race. Who knows what could have happened? Maybe.
Yeah, I didn't see any poll numbers come out, but one of the things that I think you had people shorting the cable because of the unfortunate events that happened in London over the weekend on the bridge, and so this might be a little bit of short covering, where people just kind of got squeezed out, that were you notice how we gapped down over the weekend. We gapped down over the weekend. I think people were trying to lean on the pound a little bit, and this is just, we squeezed all the way through Europe. So, like I said, I think the squeezing might be done here, and I shorted it. We're right up against a 618, so I don't mind, risking about 20 pips in this trade. Risking 20 pips to make maybe 40, back to the downside. I have no problem doing that. So, and it's kind of on a day where I'm trying to figure out things to do because I'm not entirely sold on anything at the moment. Here's the pound yen. The pound yen made a nice little rally. You know, the pound yen is one of those that we had to pay attention to that we rejected on Thursday, or on Friday, excuse me, right at trendline resistance. We're coming back up towards trendline resistance again. So, you know, pound yen will probably come under some pressure alongside the pound dollar. So
50% fib, Blake, at 141.85 has proven to be resilient, actually. There that you have, if you see, we didn't manage to close below it intraday because that's a 4-hour chart, but intraday we never managed to close below that 50% fib.
Yeah,
I'd be more interested at 61.8, Steve, just my opinion.
I agree with you because it also confluences with the channel support.
Yeah.
I agree with you, but the 50% has proven, resilient, a lot resilient for now. And a break above this channel will start putting me in thoughts. Because if you see the break of the channel there coincides with the previous low we found, which is also the 38.2% on the way down there, 143.35, whatever it is. So a break above there, is going to make it debatable if we have another low coming or not.
Yeah, I'm kind of in favor of Blake's scenario in the yen.
Me too. That's my main scenario. Yes.
Yeah, that the yen breaks down could take the guppy down one more time.
Oh, it'll take every yen pair down. I mean, I use the dollar yen as my basis for what I'm doing with any other yen pair if I'm trading them. So yeah, if the dollar yen breaks down, you got to imagine that every other yen pair is going to break lower. Now, Dale, I know you were mentioning it earlier.
Hello.
Oh, hey, Nick.
I was just going to say, for me, the squeezing cable is a perfect bearish Gartley at 129.90, 129.85, 129.90.
129.90 up here?
Yeah.
Right here?
That's an ABC from the low on Friday. That's a 786, and yeah, it's a perfect Gartley.
Don't you wish he would have told you that 10 minutes ago?
But here's the thing. I don't see it.
I've been sitting here trying to interrupt don't want to interrupt your flow. And then the only time I could get anything in is when you lost all your screen, and I thought, well, this isn't a good time, so I'm sorry.
Well, Nick, I don't see it though. I don't,
Hourly.
Hourly. Okay, so.
Yeah. So it's from that high.
Oh, okay. It's your major trend line. It's almost a breakout up there. But interesting, Nick.
So wait, so it would be, I still don't get it. So like here.
Yeah, exactly.
Okay.
Yeah.
Right at where everyone's going to be getting long, Nick, over that trend line.
Yeah, exactly.
Classic.
That's how it works, isn't it?
It is how it works. It is totally how it works. But yeah,
I think it's squeezing everyone who's piled in short.
Right, and wouldn't you agree that a lot of people probably piled in short over the weekend, or like on Sunday, thinking, here it is, the pounds.
The terrorist incident and the election, of course, yeah.
Yeah, so everybody.
I think that the pound is rallying as well, because I think people see the terrorist incident as making Theresa May more likely to get back in.
Right, and that's a great point, and I think a lot of people, I actually 100% agree with that. That they're like, we have another terrorist attack, so of course it's going to be favorable for Theresa May. So, it's interesting. I was watching. I don't know if you guys watch it. My wife and I started this weekend. We only watched a couple episodes of House of Cards, and because it's a great show, and we missed the when it launched because we were in Mexico, but they're like, oh yeah, we create terror. It's like it makes you think, though, doesn't it? It makes you think.
You mean false flags?
Yeah, I mean, it's a thing, but just going along with Nick's point is, and then I have to agree that a terrorist event, it tends to put fear in voters' eyes, and it usually helps the status quo.
I voted for Kevin Spacey.
Me too. I think he's great. So so thanks for the look, and Nick, since you're here, maybe you can comment a little bit on this. If you guys didn't catch it, we are now doing analysis on Bitcoin and Ethereum, and I just did an update this morning on Ethereum when it was coming down towards this the breakout point. But these are cryptocurrencies that are extremely in vogue right now, and I do have to admit that I think that they're going to
They're here to stay.
Well, yeah. Well, I was just going to say they may be in bubble territory right now, like you're looking at them and going, oh God, I don't want to chase it up here. But I do believe that this isn't a craze anymore. This is it's starting to become more mainstream, and as a result, as a company, we want to start covering it as well, because it will become more liquid in the future. People will start trading it more actively, whether it's Bitcoin or Ethereum or what's the new one, Nick? Okay, well, she was here, but there's another one that she's got.
Mic failure. Yeah, no, I do see money going from Bitcoin to the new ones. There's a bunch of them. Ethereum's probably the biggest and the most popular and the best set up to go higher, but there are quite a lot of them. Ripple's very well followed as well. So
yeah, so there's a lot of these cryptocurrencies, and they're garnering a lot of attention, and I think that we have to pay attention to them and what they're doing, and from a correlation standpoint, I think are going to be equally as important. As they lose luster, perhaps that can weigh on gold, and maybe will boost the dollar, or vice versa. Those correlations that we're going to be paying attention to moving forward are things that are worth noting, and I think things that as they gain more liquidity, they have the potential to move more of the mainstay markets. So anyway,
quite a good risk on, risk off asset as well. While stocks are quite well bid, Bitcoin is not so pretty. So
right,
in Asia.
And it's going to be really interesting to see if stocks start to come off of these highs, how they react to that in particular. So I think it's going to be rather interesting moving forward, and so we did incorporate them into our analysis, and hopefully they'll be here to stay. We'll see. Only time will tell. We could get in a period of flatness in these, and we might remove them temporarily. So anyway. Any other comments, Dale? Because I might switch it back over to you. I actually have to take a little bit of a break myself, and maybe there's some other because I want to be back here for the interview today, but maybe there's some other traders that have charts that they wanted to share as well.
Perhaps also Nick wants to show what he sees in Ethereum, since from what I understand, Nick, you're very constructive. I also saw your analysis, actually, to be honest. You're very constructive on Ethereum, right?
Her mic.
I do. I like Ethereum a lot. Sorry.
Okay. You wanna share for our friends here your view on Ethereum?
Just let me get it ready for you, of course.
The major point that Nick made is the transaction power of these different cryptos, that their ability to handle a volume of transactions, which Bitcoin, I believe Nick said, can only do, 30 a second?
Bitcoin can only do 4 or 5 transactions worldwide per second.
Per second, okay.
Yeah, and Ethereum, I think, can do about 300. It's constructed differently.
Okay.
So
that's probably what's going to make or break these cryptocurrencies in the future. Sorry, I got to take a little bit of a break. Thanks, Nick. Thanks, guys. I'll be back in a bit.
Okay, buddy. Go ahead, Nick.
Okay, so here's my chart of Ethereum, and as you can see, from these minor swings here, I've been using projections of Fibonacci projections for levels, and they've kind of worked, especially of this wave one here. And so I'm looking really like my next target is up here. I think we've got resistance. So I've got 3. So this is where my 3. It's very messy on here. Hold on, let me zoom in. So basically, this is where my targets come from the Fibonacci projections from the lows. Okay, so we're looking at a daily chart. So if I go down to a 4-hour chart, you can see, you know, we had a nice ABC and a 5-wave rally. Now we've had a wedge consolidation and another rally. I think this is a new rally underway. So we're going to have some trouble at the 161.8 here, but really, you know, too much lines up from the lows at sort of 265, and then I've got that big target at the 2618 and that big projection from the lows around 282 to sort of 286. So those are the levels I'm looking at on the upside. You know, I expect it to climb on a ladder, and then from there, you know, probably a decent correction.
Nick,
but
from an Elliott
my big target is up here at 360. So,
Nick, in the very short term, from an Elliott wave perspective, the wedge you have there, which can also be interpreted as a triangle.
Right, I'm expecting a wave. Yeah, like that's very often a wave 4, isn't it? You're
Exactly. So
right.
I'm thinking that perhaps we have a retracement back to wave 4 and the previous peak soon.
Yes.
Before we start seeing another 5-wave up.
We definitely could do that, yeah. We definitely could. So that's what basically I'm looking at, so with Ethereum. So this is why I like it as a bullish chart. So it's
perfect. By the way, there's another friend that's asking for oil. So since we have you here, and I know that you've been trading oil very, very actively, you want to share your viewpoint on oil after Bitcoin or whatever you wanted to show?
Definitely. No. So you know, I expect to some extent. So I think I disagree. I'm just going to stay here for a minute and look at Bitcoin while we're here. So I think here's the thing. So like Bitcoin, you know, when this rally had finished, we're going to see another long extended correction, I think, equal to this one on the weekly chart. But for me,
2 years?
Yeah, a year and a half. So for me, but I don't think we're quite there yet. And for me, Bitcoin, although it sold off really close to the level I was expecting, it didn't quite tag it. So I still think that we're going to tag this 2800 level somehow. We're either going to keep going higher here and then collapse off it, or we're going to make a wedge or a triangle pattern, or even I doubt we'll see an ABC, so I'm going to delete these now. But we're right now in this rally from the low, we're right now in an ABC pattern here. So we're right now vulnerable. Sorry, I wasn't expecting to show this, so it's a little bit messy. But this rally from the low on the 27th is an ABC right here, and so we're vulnerable to a drop, or we could keep going to that big level and then drop, one or the other. I think it's more likely we'll do some wedge consolidation. We'll see. So that's the Bitcoin, and then we'll get some. You know, I'm still bearish oil. So as usual, you know, you can set your clock by rallies on a Friday, and we had a good rally on Friday. The reason that oil does that, honestly, it's no more simple than geopolitical risk. You know, you ease up your shorts on a weekend, because if anything happens that on a weekend that will affect the oil market, it's almost always bullish for the oil market. It's almost, you know, nobody's going to announce that they're going to release the strategic reserve on a weekend, so it's almost always geopolitical stress, you know. So that's why you tend to see rallies on a Friday when people square up and de-risk ahead of the weekend. So I've got, you know, a back pattern support. I'm still looking for at least 45, and I expect to bounce from there. And then if we continue lower to, I'm looking around 40, 50. So we'll see. You know, we've just had this ABC rally up, and what we could be doing here, if we don't make a new low, we could see another ABC higher before we continue lower, but I rather lean to not, and I think it continues lower from here.
By the way, Nick, another bearish day for oil, but on the other hand, CAD is holding up quite nicely, eh?
I do not honestly understand. Yeah, like, and the other dollar pairs have been much, the other dollar majors, you know, the other major currencies against the dollar have been much stronger. I don't really understand the why this is happening with the CAD, but there you go. I picked the wrong horse on Friday with the CAD, so I'll take a look at that for you now. Hold on. So if we look at the, if we look at the Aussie first, you can see that we made a really nice moving a corrective ABC, so we made an ABC lower, then we rallied and then we made an ABC lower, and we're rallying again. So I expect us to go, 75.50, maybe 76, one of those two. The 75.50 level would be an ABC from this low, and then we'd be looking lower again. And this is the fib support here. So that was the look in Aussie. And these commodity currencies usually go all the same way. Although the Kiwi, is approaching resistance. That's the 50% of this entire decline. So, but I think more likely this is more of a channel and keep going to the trend line and 72.30. So these other commodity currencies, are quite weak. So I really did expect from this ABC rally that the CAD would continue lower, but it can be really quite devious, the CAD, and it's not behaving today. So
great call on the confluence of fib confluence on Aussie Kiwi on Friday, Nick.
Oh yeah, yeah.
Major
we'll see how that goes.
Yes.
So yeah, very big reversal there. So, but yeah, this is the same. This is all I'm looking at in. This is the Gartley pattern. I haven't drawn it in, but that's where the pattern terminates in the cable. So pretty much everything is rallying against the dollar except the CAD. So we'll see what happens after the open. Quite often the CAD's a big mover in the afternoon where, or in the US session when the others aren't. So we'll see what happens then.
Thank you, Nick.
That's all I'm looking at.
Just a quick, you had it on the euro for a second. You're still expecting, I think you had some upside targets above
really
113.
grindy, isn't it? But I am, because you see these blue, like you can't see it because I've got them the wrong way around, but so these blue levels, I'm going to zoom out a bit. So in this correction, so this is A, B, C. If this was an A, B, C, D pattern, so from this August 2015 high, I've got the fib stretched across from that high to this low, and we've respected them really nicely on the way up. This was the 38.2, and so we had a bit of an argument at the 618, but the 50% was a perfect touch also, and so now we've cleared and traded above the 61.8. So for me, the minimum, the next one is up here, at 114. So, and that's also the 2.618 from these corrective swings. There's quite a lot projected here. Whenever we've had a lot of a cluster of projections, we've had trouble, and setbacks there. That's what's happened at the other ones. That's what happened
that line above is the same. That line above is the same that Blake has on his weekly chart.
Right.
Yeah.
So like this level here, where there was a big cluster, has given us significant trouble. Now we've broken above it. I would be amazed if it's not support to continue higher to these levels, and we can project some more up there. So that's what I'm looking at in the area. I haven't even put this on, so it's going to keep going higher. So yeah, I think we'll stall about 113.10, 113.20, but I expect we'll. Let's see, we're higher. So yeah, I think we're going to keep going higher.
Good.
And it's amazing, really, when you think how the sentiment is. We are going to get a turn soon. I'm just not quite there yet. That's all.
Okay.
And that's very close to the dollar index, to that same 61.8 that Blake showed everybody. That, you know, I expect us to end up there around the same time. And I think if we do get some weakness in the pound this week, that'll moderate it. So because although we're not very far from our DXY target, we're quite far from this euro target. And I think that you know, maybe the pound moves will propel us up there. We'll see.
That's
So
very
what I'm
likely
looking
a
at.
move from the pound, you know, giving the extra, yes, fuel. The pair needs to run higher.
Yeah.
That's a good point.
Steve, would you mind taking over for a while? I'm just going to make sure Jack is getting in okay. I'm going to check my emails and
Yes,
take a little
absolutely.
break.
I can start. Nick, anything else you're viewing at the moment, by the way? I don't know if you have any analysis. A friend is asking actually about Aussie CAD. I see very mixed things in Aussie CAD because we've tested a high and we've retesting a low, so I see a very choppy picture there.
I haven't looked at Aussie CAD, but I'll take a look and post a chart for you in a bit.
Okay. I'm seeing, you know, very choppy things in Aussie CAD. I can show it afterwards to our friends. But what I can do is that since our friend asked, I'll take over the screen. I'll show you what I see in Aussie CAD, and you give me an input as well. Because as I told you, this is not a clean chart. I mean, it used to be quite clean technically, but now it has started getting messed up. Can you see my screen, by the way?
Yes, I can.
Okay. Okay, we've had here a very nice, you know, huge triangle. You know, we respected it, everything okay. We broke out. Then things started getting messed up because we broke below it, we broke above it. We retested the high, so we double topped in a sense. Then we formed a head and shoulders target, which we actually hit perfectly. And then we went on to make it a triple top, and now we are bouncing again after a retesting once again that previous head and shoulders target. So more or less we've been in a very choppy range since February that we actually broke above here once again. So we've been testing the highs and the lows over and over and over again. I don't know if you see something from a harmonic
that
perspective.
level though, those highs, so they come in about 103.45 for me. That's an ABC pattern correction from the August 2015 low on the weekly. So that's, you know, for me, we've had a big, I think we're in a big, you know, from the 2011 high, we've had a correction lower. Now we've seen a corrective leg higher. I think we'll see one more leg lower before this is over, and that's just like really, I know, really big view, but
yeah, but it's quite choppy, you have to admit here.
I would say below 103.45, having seen that reaction of those levels, that I would be selling rallies and I would be bearish. Yeah.
Yes, I agree with you. Although, you know, here, for example, how many times have we seen an actual triple top formation? Because up to this point, we've actually had a triple top. So I don't know. My gut feeling tells me that making it a quadruple top, if we go up here to retesting it, I don't know. That seems like a very long shot to me. I don't know what you think. I mean, if we actually manage to retest this level.
I think that you know, the price action says we could retest that level. It's very,
yeah, if you see, it produces violent moves every time it tests those two extremes, very violent moves. Just look at this. Look at the reaction we had when we tested it for a second time here. Look at the reaction we had the first time we tested. Look at the reaction, the huge bullish candle we had after getting this low, and look at the reaction two straight days in a row with very strong bullish candles after we retested again. I mean, very, very violent reactions of the edges of this.
Yeah. I think though that's quite often because it's a cross, you know, so very few people are, you know, trading this. They're looking at other forces, and so that's why it does that. But
true.
Yeah,
okay,
I need to spend some time with it. But
let's have a look at what our friends are showing us. Ronit is sharing some USD CAD views. Let's see. And by the way, everybody stay here because, as you know, we have Jack Schwager coming on in, what is it, 5 minutes from now. Okay, so he's seeing like a megaphone formation here.
Yeah.
From what I see, this is a weekly chart.
Yeah, on the weekly, no, you're right. We could just keep going higher. So we rolled over at a 50%. We could keep going to the 61.8. So.
And let's see what else.
It's unusual when it's not, you know, we're so used to seeing the dollar when it's all $1 move. When it's other currencies driving it, I guess we get a bit head scratching.
And this is what he's seeing in Ethereum.
Oh yeah, good look with that fan. Thanks.
Yeah. As you see, indeed, this. Yeah.
Ronan's very esoteric, technically.
Thanks, Ronan.
Yeah.
So we could just keep climbing up that green line, couldn't we?
Yes, as it seems,
Working
yes.
very well as a resistance.
He also has a view on US banks. Let's have a look at it.
Oh, toppy head and shoulders.
Yes, it looks like it actually, indeed. Looks like being in trouble. If we go below here, from what I see, a retest of 80, which is also this high, is quite likely in the card. So making a move like this to at least test this high before perhaps moving higher.
Jack, you have to check into the room. I'm going to give you the link, okay? Steve, can you Skype me the link for Jack to get in? We're not doing it on Skype. Okay, buddy?
Oh, yeah, sure. I'm giving you the link
Jack,
now.
we're not doing it on Skype. I have to give you, I provided a link for you to get in. I'm going to give you a link. Hold on, I'm going to drop the link. Oh, you got it?
There it is.
Okay.
He just
I'm really
has,
excited for this. Such a
yeah,
legend.
same here. Extremely excited, actually.
Get in. Okay, hold on, Jack. Steve, can
Yes,
you give
mate.
me the link for me to give it to Jack? There
I
it is.
already put it on Skype for you.
Thank you, buddy. I'm going to drop it in your Skype box here.
Yeah, he just has to register there and then he will immediately find himself in here.
Register here. And, okay.
It's a 30-second process.
Here you go, Jack. We have time. Don't worry. So there's a link.
By the way, Nick,
I put it on your IM.
is this the level you're looking for in
Click
S&P
that
as
and
well?
just register, and then I'll see you in here and I'll pass you the
The
control.
161 extension.
You see it on your instant messenger link?
Okay, there's also some kind of an ascending wedge from here, I mean, that I'm looking at, but for sure, I mean, the inability of stocks to correct lower, no matter what kind of news we have, is amazing.
Okay, well, this is, do you see the link I posted on Skype? You click it. Look under your, on Skype. I could email it to you, but it's right there.
Dale?
Yeah. You just register. Yeah, join it.
Perfect. Is he joining in, Dale?
Okay. There you are. I got you, Jack. So I'm going to hang up on Skype, and I'm going to pass you the control.
Okay, that's great.
Okay, Jack, I should be able to hear you pretty soon here.
It needs a few seconds, Dale, until his account actually gets enabled. You'll see it when the microphone appears.
Okay.
It's, until he listens to all the welcome etc., etc., etc.
Okay. I just made him a panelist, so he should be able to. Hi, Mystic. How are you? Just waiting for Jack's audio to.
Okay, can you hear me?
I can hear you, Jack.
Okay, I hear you fine.
All right, Jack.
Hey.
First of all, I want to thank you so much for taking the time out of your day to address the FACE community. I also want to thank you for sending me a copy of the book. If you can see the screen, I'm showing it here. A Complete Guide to the Futures Market, 2nd edition. And we're going to spend the first part of the interview talking about this. Let me share my screen. There we go.
Yes, we can see it.
Okay, there's your book, Jack. It is one of the most comprehensive books on the markets that I've ever seen. You know, I've joked to people that you could come up with any question about the futures market and you'll find the answer to it in here. Congratulations on a great work.
Oh, thanks a lot, Dale. Appreciate it.
And you know what, Jack? I think this should be required reading for, first of all, anyone that wants to trade futures. And second of all, more importantly, for anyone who wants to get a license to be a Series 3 broker or a CTA. If you want, I'll send a letter to the NFA and CFTC and suggest it. But it's so comprehensive that it's not a quick read for anybody, unless you took Evelyn Wood. But it has everything in it that anyone that's going to trade these markets would not know and can learn. So I just want to pick up on a few points from your book. And then the second half of the interview, I want to talk about Fund Seeder. Okay, buddy?
Hey, sounds great. Sure.
Okay. So there's always a big debate, and you addressed it in the book, about fundamental analysis and technical analysis. And my training was, you know, technical analysis of stock trends by Edwards and McGee. That was the Bible in the 70s. So I was always a chartist, and to me, patterns and everything like that meant everything. And then I would go and look at fundamentals to see if it backed up what I was seeing technically. And you talk about one of the biggest mistakes that people could make relying on fundamental analysis is using the wrong sources for their fundamental analysis. For example, blogs and you know, people that aren't credible sources, and that you should use government agencies like the CFTC reports or the Department of Agriculture report. Have you noticed in your training of people that people gravitate more towards fundamentals or technicals, and which way do you gravitate?
Okay, well, I think that's a personal issue in the sense that I think for some people, fundamentals are the right approach. For some people, technical are the right approach. And for some people, combination is the right approach. And there is no answer what's right for everybody. It's really something that you have to discover on your own. You know, myself, I started out as a fundamentalist, you know, went to technical, went to all computerized trading, and then ended up discretionary technical. So it's really a self-discovery in a way. And however, having said that, and while I've known people who've disdained technicals and just used fundamentals and did great, and vice versa, but the big thing that I find to be advantageous about technical versus fundamental is that technical, the risk management is sort of natural with the approach, whereas in fundamental, it's almost in opposition. By that I mean, if you decide something is underpriced, let's say you decide that wheat is too low when it's $6, and you buy it at $6, and then it goes to $5.50, and nothing has changed. Well, it's even a better buy, so you should buy more. So that makes the combined fundamentals and risk control is tough. So that's one reason, one advantage.
I think a quote out of your book is one of the biggest mistakes is to be rigid on a fundamental view, but wouldn't that also apply to being rigid on a technical view? You could always find something technically to justify your position.
Yeah, but the thing is, with technical, it will likely change. So, you know, if I'm rigid, if I say, well, this is, you know, this market's going to an uptrend and it's going much higher, and I'm very rigid on that. But if it starts breaking down, if I'm true to my approach, eventually I got to admit, well, it's not an uptrend anymore, right? But in fundamentals, It's just the opposite. If I'm rigid that something is too cheap and it goes down and nothing has changed, then I think it's even cheaper, you know. So that's the tough part, you know. That's where the tough part comes in. And in fact, ironically, one of the things I do point out in the book is that one of the best uses of fundamentals is not in the conventional sense, but it's almost in a contrarian sense. In other words, you know, some news comes out that should be really supportive to your case. Let's say you're bullish and you expect the market should go up, and instead it barely reacts. Well, that might be a bearish signal, you know. So in that sense,
so it's already priced in, and that's, you know, most technicians believe that markets already are pricing in fundamental events to the most part, and that's how you have, like, on a good earnings report, the stock has gone up and up and up, and then they get good earnings, and it's buy the rumor, sell the fact.
Yeah, and I find there's no consistency in that. Sometimes they are, sometimes they aren't, sometimes it isn't. But how a market reacts to news, on balance, is useful. So even if you're a pure technician, seeing how a market reacts to news can be helpful. You know, and there's all sorts of you know. I mean, I can remember, let's say, I think like. I mean, there's millions of examples, but I remember it was like Kurt late at night at FX when the nuclear reactor in Japan, you had the tsunami, right?
Oh, the Fukushima.
That news hit, and I remember that, you know, the currency getting hit, and then, you know, but then 20 minutes later it turned around completely and it kept going, you know. So stuff like that is very interesting.
Yeah, that's kind of like the saying, people who buy headlines today sell newspapers tomorrow. I think that one of your key lines in here, and I teach this, and I think everyone should write it down. You say, and I quote you, know when you're going to get out before you get in. And I assume that's talking about risk management, but it may also apply to targets and objectives, so that you have a complete strategy before you commit to assuming risk on a trade.
Yeah, it's actually a quote from Bruce Covener, and there's a material in this book that really summarizes some of the key lessons from the Market Wizards books. There's a whole, as you know, chapters on that. But then that particular quote, yes, it was mainly intended for the risk management portion of it. However, yeah, incorporating, as you said, a full plan as well as where you get out is certainly beneficial. The thing that makes it particularly important on the risk side is simply that loss of objectivity once you're in the position. And it's one thing to let a loss get out of hand, but if you're not perfect in taking a profit, well, you know, that's not as bad as getting killed on a trade.
Yeah, so isn't that, say for example, when you take a trade, maybe you'll have a confluence of things coming together. It could be some type of trigger, whether it's you know, MACD, and you have some moving averages coming in there. You have some major support, resistance pivots. So you know your reason that is compelling you to take the trade, and then once those contingencies are negated, that's your reason to be out of the trade.
Well, yeah, if it's based on in that case, it's based on fundamental reasons, and if those fundamental reasons no longer apply.
Yeah, those are technical reasons. I wouldn't know how to manage risk with a fundamental opinion.
Well, the technical reason, if they're technicals that only imply a short-term move, but I guess from my perspective, a lot of times I think technical is more as short-term signals with long-term implications.
Okay. I also remember from a prior interview, I asked one of the most important things that a trader could do, and you said that each trader should find a style that fits his personality. I want to move to trade your plan the trade, trade your plan, and you spend some time in the book talking about having a planning time routine. Is that something that people do every day? I mean, a lot of my planning is done on the weekend when the markets are closed and there's no noise. What do you recommend for traders?
Yeah, and no, it doesn't have to be, that depends on your style. So,
okay.
Some people do it like every evening. Some people do, at the end of the week. It depends on their style. And there's a lot to be, if you're longer term, at the end of the week can often be very good because it keeps that long-term perspective as long as the risk management is there, to cover you during the week. But any of those, whichever one is right for the time frame you're operating in or your particular approach, either one of those is fine. The point is, it's not a shoot from the hip approach. It is something that is planned out. The worst trades I find are the trades if you're in front of your computer and you see the market do something and you weren't planning anything. You say, well, that looks. Let me buy that. Or let me sell that. Those are usually the trades that don't work.
Yeah, that's impulse trading. So you're seriously against impulse trading or FOMO trading.
You know why? I mean, there's a good reason for that because and I've pointed this out in other books and this book as well probably. But our natural instincts are just not good for trading. The things we do naturally as humans, the emotions we have, and this goes into behavioral economics, are just very poorly attuned to making correct trading decisions. So the odds are, if it's an impulsive trade, that it's just you're reacting to a human emotion, and it's usually not going to end well as far as the trade goes, which is different, though, than if you're seriously following a market and you see something happen, you've got an intuition that the market is a strong intuition that the market's going in a direction. That's a bit different because there the intuition is really coming from your experience, and that's not the same as an impulse. So how
long does it take in your experience, and you've interviewed wizards? I've talked about, people having unrealistic expectations about how long it would take for them to maybe make breakthroughs and start to become not just break-even traders, but profitable traders. And I use the metaphor like you go to college for an undergrad degree for 4 years, and even if you're in a trade, you're an apprentice for many years. And Blake brought up that some of the traders that he works with on a fund, their assistants just sit by the pro for 5 years before they could do anything. In your experience of interviewing trades and even personally, isn't it realistic to expect the process to take not months but several years before because you can't learn experience?
Yeah, absolutely.
It only comes with the passing of time.
Yeah, absolutely. Real time is slow in that sense. You just can't get, as you say, you can't get experience in 3 months. So so traders, new traders come into this with very unrealistic expectations. And
would you say it's like going to college, at least for an undergrad degree?
That's a fair, time-wise, that's a fair analogy.
Okay. I also wanted to ask you, you brought up keeping a trading diary and a spreadsheet. And perhaps you could explain, I know some people are just too lazy to do it, and then I've talked to some successful traders that used to do it, and I got an answer. I asked if they still kept a diary, and they said that they were too successful and too lazy to keep doing it.
Well, I guess...
Go ahead.
If you're too successful, then there's no problem. But the idea behind that is that we all make mistakes. Everyone does, and not only you make mistakes, but you repeat mistakes. Now, the great thing about if you write them down, and it doesn't mean that you have to you have to make a diary for every trade. I mean, if you keep a record of every trade, the reasons why you did it and how it worked out, and you can build up a database like that, you may be able to distinguish, which types of trades are working, which ones are not. So it's kind of useful from that type of analysis. But one of the key things about it is if you write down trades that are really where you made the decision that there's some insight there or some lesson to be learned, and particularly if it didn't work out. So, like if you made a mistake and you know what the mistake was, and you write it down and you say, never to make this mistake again. But if you're reading that with some regularity, maybe it won't keep you from ever making that mistake again, but it will certainly reduce it. So instead of making the same mistake 20 times, you'll make it twice or whatever.
So it helps you by writing things down, create a new paradigm for yourself. I think psychologists, NLP people call it neuro-linguistic programming, and a diary would be a big part of that.
Yeah, it reinforces the right things to do and the wrong things to avoid from your own experience and by your own methodology, and that's very helpful because there's something, I mean, you're going to lose a certain number of trades even if you do everything right. That's part of it. It's a probability game, right? But there are trades where you lose not because of probabilities, but because you didn't do what you knew you should have done. Or, you know, and that happens all the time. So if you can reduce those mistakes, then it can't but help but improve the results.
Okay, I have one more question before I shift gears to Fund Seeder, and it really applies to people that are not discretionary traders, but they believe in systems. You know, when I was a little bit more jaded or naive or egotistical, I used to say system traders are for people who don't know how to trade, but I've since changed my mind that, you know, automatic pilot can be great. And you talk about back testing. Can you just lay out a couple of the errors that people make when they're back testing and the best way to go about it when they're back testing their system?
Sure, that's a great question. I'm glad you brought that up for people in your audience who do systematic trading. The biggest mistake people make, and it's a giant mistake, and it really leads people wrong on this, is they use hindsight, and they draw conclusions which are hindsight contaminated. I think that's a good word for that.
I like that.
And so the important thing is and I talk about there's chapters, and there's multiple chapters in the book that talk about this, but the important thing is to use a testing methodology that avoids hindsight. And there are ways to do it, and like I say, we don't have enough time to go into that now, but there are ways to do it, and they're explained in the book. So I think it's critical to avoid hindsight. And the other big mistake, and I got to throw this out because this is another giant mistake people make, is a blind reliance on optimization. The reality is, you know, people will create a system that fits past really well and find the best variation, and then believe that's a good representation of what the future is going to be. The reality is, and people will discover this if they do this work, that there's very, very little benefit to optimization. And what it ends up doing more is fooling people as to what the system can do. So I am one that avoids creating systems that are overly optimized. I think that's a big mistake.
Okay, so optimization equals unrealistic expectations of your system.
Right, and often systems that are not robust. They're fit to the past, but they won't work in the future. And again, so those are the two big things. Those are the two big messages I would leave people who are interested in systematic trading that they need to keep in mind.
Okay, Jack, I'm on your Fund Seeder website now.
Yep.
And I could tell you this, you know, I've been involved in facilitating and moderating trading rooms for quite a few years with both prop traders, retail traders, running communities of people trying to learn to trade. But I'll tell you that over the years, I know many, you know, 30, 40, 50 traders that you always, you know, would share their work and their trades, and it's not a hobby for them. This is how they support their family, put a roof over their head, food on the table, have the lifestyle as a trader. So why don't you explain to that crowd of people that are already proven that would have P&Ls to document their performance, what Fund Seeder is and how it might be a fit for them?
Sure, thanks. Well, the concept behind Fund Seeder is to create a global meeting place or a connector between trading talent and allocators looking for new traders or undiscovered trading talent to allocate money. As the business is now configured, the vast majority, probably close to 90% of the money, goes to a relatively small number of large managers. But globally, there's millions of traders out there, and tens of millions probably, and out of that, there's many thousands and tens of thousands of good traders who never have a chance to get anywhere because they don't have the right connections or they don't have the right people, they're in the wrong country, whatever. So the idea was of FundSeeder was to set up a website where traders globally could link their accounts and daily have their accounts verified, and we have all sorts of analytics on that site, which you can't see the analytics unless you actually register, unless you actually link up an account. But then you basically can do stuff like chart your equity curve. You can even do technical analysis on your equity curve. You can generate all sorts of statistics. You can do underwater charts. There's a whole platform of tools that are available and continually expanding, and we provide that all for free because not because we're saints or anything, but we do that because we want to get a larger critical mass of traders. We want to become the site that traders worldwide go to for free analysis of their trading, but also have an opportunity to establish verified track records. And so we provide that, and then we have a sister company that does that looks for that does the investment side.
Okay, so the sister company, FundSeeder's been online, what, a couple years now, Jack?
Well, FundSeeder Technologies has been a few years, and we've totally focused on developing, and we're still, in fact, we're now got some partnerships coming up. We're going to be expanding that platform tremendously over the next year probably, but we're focused on the trader product. This year we're going to begin developing the investor side of it, so for the sister company, and that will use the database of the trader side. So
how many traders have you discovered through FundSeeder that have been actually reached the level to where they've been funded in the last few years?
Well, like I say, we focus on just on the technology side. So the investor side, we've placed some traders preliminarily, but we haven't really, we had to do this in steps because we started out as a largely self-funded tech startup. And we're only now beginning to establish some major partnerships. And so the plan was get the trader side first, then do the investment side. But once you have a critical base, and so now we're developing that, and that side is just preliminary. It's not developed like the trader side. That side, in fact, we've got our technology team is actually in Ukraine. And I'm actually traveling out there this month to work with them on developing the trader side, the investor side.
Interesting. So can you explain what would be the difference between what you're doing and a lot of prop trading firms? Because a lot of prop trading firms, it's not exactly a level playing field for the traders that come in. I mean, part of their models and profit center is they're happy if someone just moves sideways because they have an IB deal or a BD deal where there is a profit center based on the volume of traders, the volume of trades from their traders, and they have to pay a lot of money to get into the program. Are you familiar with what the prop world is like out there, and how is FundSeeder different?
Yeah, it's a little bit, and our model is different. You can think of us more as the web version of a third-party marketing, in the sense that our model is not to make money on commissions or as some firms have a trader following other traders or anything like that. Our model is, have the one site find traders and have the other site use that database to place those traders with investors who are interested in finding trading talent, and make that a modern web-based function rather than a manual function. So we see this as sort of bringing the connecting of the traders and investors to the modern age, to globalize it and to democratize it basically as well. Okay,
I'd like to wrap it with this question, Jack, that I've been asked for decades. People said, Dale, you know, what's the correct amount of equity that I can trade with so I could trade for a living? Or they'd say something like, can I trade for a living with a $10,000 account? And I would answer them, yes, if you want to live beneath an underpass. So I'm sure that you're asked this question, and in FundSeeder, I see that you're educating newer traders. What do you tell them? It's probably not a dollar amount, but you know, people have to be able to live through drawdowns and still support themselves.
Yeah.
And, you know, all the smart guys have more than one income stream than just their trading account, don't they?
Well, I mean, I know traders who just live obviously just as traders, but it's hard. I mean, the people, you know, earning a living as a trader is hard, and you can't just do it coming out without having a lot of money, because you need enough money that you can afford to lose, and the base has to be enough so that a realistic percentage gain during the year is enough to live on. And those are not easy things to fulfill. So realistically, for many people, it would mean actually building up some wealth in other ways, so they have the money that they can trade, or if they can, you know, managing money and earning fees off of that, and maybe you're trading their own money then as well. But I mean, look, if you could do 20% a year consistently, you'd be a star. Well, you know, how much do you need to live on? And then and you can't risk all your capital. So if you just do the simple arithmetic,
So
yeah.
You answered my next question. You know, I've said to people that fund managers do cartwheels doing 25% a year on their equity. And
the best traders
would consider a real, yeah.
Yeah,
And
I think
the
somebody
best
like
traders in the world are happy with that, aren't they?
Yeah, well, I think somebody like Stanley Druckenmiller is one example, who's one of the best traders of all, you know, one of the best traders that is, you know, of modern times. And so he ran his own fund for almost 40 years, came close, you know, had an average return in the high 20s, and he's considered one of the best that ever lived.
Right.
So, you know, yeah, so you have people starting out in this business say, oh, I want to make 300% a year. Well, hello.
Yeah.
You know, there's something called reality here, you know.
Unrealistic hype on the internet, and you talk about that in your book too. I want to wish you all the success with your new book, Jack, the second edition, A Complete Guide to the Futures Market. I also encourage people, if they're an aspiring wizard, could I say that people that go to FundSeeder and use your technology to monitor their account, that they have the potential to be a wizard someday, that you know, your book was about a previous generation of wizards, and there's always going to be a new generation of wizards. So thanks so much for being with us today, Jack. It's always a pleasure to talk to you, because you've talked to the best, and really an excellent book, and really should be required reading for anyone getting ready to trade or become a Series 3 or CTA broker, in my humble opinion.
Well, I appreciate that, and I appreciate your taking the time to really go through everything and for the insightful questions.
Okay, Jack, we'll pick it up again and sell 1 million books. And thank you so much for starting FundSeeder for people that, you know, didn't go to Harvard, you're not connected to Goldman Sachs, and have trading talent, for them to have a route to become a successful trader. Thank you for that good work.
Hey, thanks a lot.
All right, Jack. All right, everyone, that's Jack Schwager. Pick up his book. I hope everyone enjoyed that interview. And we'll talk to everyone tomorrow. I have another great guest tomorrow. I'm not going to tell you who it is. You'll have to show up. You're very welcome. You're very welcome, Doug. Adios, my trading warrior brothers and sisters. And remember, don't just count your pips. Count your blessings. You're welcome, Brooke. See you, Greg. You're very welcome. See you, Hasselhoff. You're welcome, Nuno. Bye-bye. See you, Luca. Kevin. Everybody.